Once again, in the studio, joining me is our resident authority on all things planned giving strategies to benefit society. And of course, if you understand the tax code, it can potentially benefit your wallet. So joining me is Jacob Oren, our financial advisor extraordinaire. How we doing, brother?
Good. Thanks for having me.
So I'm glad we got you in because we're getting close to the end of the year now. This show is going to air on Thanksgiving weekend, which means people that are listening to this are going to have just a few weeks to take action. And there are some things that you want to bring to their attention. I understand that they should consider taking action because there's some pretty big legislative changes when it comes to your charitable giving starting 1/1/2026 due to the bill that was signed on July 4th.
Absolutely. Yeah, there's some big changes starting in 2026. Whether you give $100 or $100,000, those changes will affect you coming up after the new year.
Well, let's go through some of the simple ones, if you will. So
Yeah.
the blessing starting next year is basically if you are one of those that just gives $100 or $250, you now will have an above-the-line deduction available up to $1,000 per taxpayer. Is that right?
Yeah, per taxpayer. So if you're married, $2,000 filing jointly, $1,000 for the individual taxpayer. You know, those have to be cash donations. They'll be above the line deduction, so they can actually reduce your taxable income.
So that's fantastic. You're going to get that on top of the standard deduction.
That's
so
right.
basically, that's a pretty big deal for a lot of folks who do give, even if it's just to any nonprofit, Boy Scouts, whatever. As long as it's a legal 501(c)(3), up to $2,000
right.
for a married couple.
Yeah,
All right.
9 to 10% of Americans are itemized. Everybody else takes the standard deduction. So your charitable giving hasn't counted for a very, very long time. With these changes, now it's going to be added above the line.
All right, now let's kind of shift gears then. And folks that actually give a little bit larger amounts, people that are giving, $10,000, $50,000, whatever it may be, or even a couple $100,000, or even a couple of million, frankly, there are significant changes to how they're going to be able to deduct that starting, January versus this year versus next year. And you want to talk, I think, maybe a little bit about why something I use, a donor advised fund, may be something you'd want to consider here before the end of the year.
That's right. Yeah. So starting in 2026, they're adding a 0.5% adjusted gross income floor on charitable giving.
All right, so what's that mean? Let's break that down.
Yeah, absolutely. So if you have $100,000 in adjusted gross income, 500 of those dollars are not going to count towards your charitable deduction.
So if they gave, let's just say they were tithing to a church, keep it simple and doing 10%. So they made $100,000, they gave away $10,000. Under the rules today, we can deduct that $10,000 if they're itemizing.
If they're itemizing,
Right? So they need other deductions, the SALT
right.
deduction, property taxes, Nebraska income tax, et cetera. And of course, the SALT deduction went up.
SALT deduction moved
well.
from 10,000 to 40.
You're not capped at 10 anymore. So they could deduct the $10,000 this year, but next year they're going to lose $500 of that said deduction, which doesn't seem like that much. But if you're somebody that was making $1 million and you're doing $100,000, now you're going to lose $5,000 of your tax deduction.
Yeah, it does definitely make an impact.
So what can they do to work around that?
Yeah, so some of the goals that we're looking with our clients here at Retire Smart is we are trying to put as much as we can in 2025. So the first thing is we've got about 30 days left of the year. So we're going to start looking at doing larger contributions to our donor advised funds this year.
So one of the things they could do is basically, even if they don't have time or don't have a donor advised fund set up, we have many clients that do. I use one we talk about on the radio a lot. But if you don't, you could just simply double your donation.
Yeah, bunching.
Right? In other words, you could kind of bunch the donations. You could also, in theory, double your property taxes this year to use up that $40,000 SALT deduction. So you could really, now you have to have the cash flow, obviously, to be able to do this. But this is a smart strategy where you could take full advantage of this year's change in the tax code. And by doing that, you may be able to say, get $25,000 in the SALT deduction versus the 10 you've been getting for the last several years. And then maybe if you were going to give 10 grand to charity and you doubled up if you had the cash to 20, now you're looking at a $60,000 or $70,000 Schedule A versus standard deduction, which was 30 grand last year.
Yeah, absolutely.
That's massive. And
That's
somebody
huge tax savings.
a dual income family that was say in the 22 or 24% tax bracket, you just put about $10,000 to $12,000 back in that person's pocket in real money right now.
Yeah.
I mean, so you could either be blessed to give even more in the following years, or maybe that pays for your Santa shopping here coming up, right? Black Friday would have just happened by the time you heard this, but hey, we're trying to help pay that credit card off for you. Hey, if you're looking for more content like this, make sure you check out these videos, and don't forget to like, subscribe, and ring the bell so you'll be notified when we publish more content that will help you retire smart. Thanks for watching.